Imagine a moment in the future when global tensions suddenly escalate beyond control. Diplomatic negotiations fail, alliances begin to mobilize their military forces, and news outlets around the world report that a large-scale global conflict has begun. In such a situation, the world would not only face a humanitarian and geopolitical crisis, but also a massive economic shock. Financial systems would tremble, supply chains could collapse, and global markets would enter one of the most uncertain periods in modern history. In that environment, many people might assume that cryptocurrency would automatically become a safe haven. However, the reality could be far more complicated. A third world war would not only create a global economic crisis, but it could also have serious negative consequences for the cryptocurrency market. The first impact would likely come from panic across global financial markets. Historically, when extreme uncertainty appears, investors tend to move quickly to protect their capital. Stock markets could drop sharply, commodities might spike, and many investors would rush toward assets that are traditionally considered safer during crises. While some people see Bitcoin as digital gold, cryptocurrency markets are still relatively young and highly volatile. In the early stages of a global war, investors might sell crypto holdings in order to secure cash, purchase essential goods, or move their money into assets they believe are more stable. Another factor that could pressure the crypto market is the collapse of investor confidence. Cryptocurrency prices often depend heavily on market sentiment and speculation. If the world suddenly enters a massive geopolitical crisis, fear could spread quickly among investors. Large institutional investors, hedge funds, and financial institutions might begin reducing their exposure to risky assets. Since cryptocurrencies are often classified as high-risk investments, they could experience large sell-offs during the first phase of global conflict. A world war would also severely disrupt global economic activity. International trade might slow dramatically as shipping routes become unsafe and countries focus on military priorities. Factories could close, supply chains could break down, and energy prices might skyrocket. When the global economy slows down this drastically, investment capital tends to shrink. People focus more on survival, essential goods, and basic financial security rather than speculative investments like cryptocurrencies. Another major issue involves infrastructure. Cryptocurrency networks depend on electricity, internet connectivity, and a stable technological environment. While blockchain networks are decentralized, they still rely on thousands of computers around the world remaining connected to the internet. In a large-scale global conflict, cyber attacks, power outages, and infrastructure damage could disrupt parts of the global internet. Even temporary disruptions could affect crypto trading, mining operations, and blockchain verification processes. Cryptocurrency exchanges would likely become major pressure points during such a crisis. Many people store their digital assets on exchanges rather than in personal wallets. If a global war creates panic, millions of users might attempt to withdraw funds at the same time. This could overwhelm certain platforms, creating liquidity problems or temporary shutdowns. Similar situations have already occurred during major market crashes in the past, but during a global war the scale could be far greater. Mining operations would also face serious challenges. Cryptocurrency mining requires specialized hardware and massive amounts of electricity. In times of war, governments often prioritize energy resources for military production, essential services, and critical infrastructure. Energy prices could rise dramatically, making mining operations less profitable or even impossible in some regions. Large mining facilities might shut down temporarily if electricity becomes scarce or too expensive. In addition to physical infrastructure problems, there is also the growing threat of cyber warfare. Modern wars are no longer fought only with tanks and missiles. Digital attacks have become one of the most powerful weapons in geopolitical conflict. Governments and state-sponsored hackers might target financial systems, communication networks, and digital infrastructure. Cryptocurrency exchanges, wallets, and blockchain networks could become targets for hacking attempts or cyber sabotage. Regulation would likely become much stricter during wartime. Governments often impose financial controls to protect national economies and prevent capital flight. Authorities might restrict cryptocurrency trading, require stricter identity verification, or temporarily bans certain digital asset activities. From a government perspective, controlling the flow of money during wartime can be seen as necessary for maintaining national stability. Such regulations could reduce liquidity in the crypto market. If large populations suddenly lose access to exchanges or face strict financial monitoring, the free flow of cryptocurrency trading could slow significantly. Reduced trading activity often leads to lower market confidence and more price instability. Another important issue is the behavior of ordinary people during crisis. When war threatens daily life, priorities change dramatically. Instead of thinking about long-term investments or digital assets, many people focus on basic survival needs like food, water, shelter, and safety. In those moments, liquid cash or essential goods may become more valuable than digital investments. This shift in priorities could reduce demand for cryptocurrencies in the short term. At the same time, large global investors might begin moving their capital into traditional safe haven assets such as gold, government bonds, or other commodities. Even though some supporters believe Bitcoin could replace gold as a store of value, that transition is far from guaranteed. In times of extreme uncertainty, investors often trust assets with long historical track records. Market volatility would likely become extreme. Cryptocurrency markets are already known for large price swings, but a global war could amplify those fluctuations dramatically. Prices might crash during the early phase of panic selling, then surge unexpectedly if people later begin viewing crypto as an alternative financial system. This constant instability could make the market difficult for both small investors and institutions to navigate. Stablecoins could also face challenges. Many stablecoins depend on reserves held in traditional financial systems. If banks, governments, or international payment networks experience disruption, the mechanisms that support stablecoin stability could come under pressure. Questions about reserves and transparency might cause sudden loss of trust in certain digital assets. Another long-term effect could involve the fragmentation of the global internet. Some experts have already discussed the possibility of countries creating separate digital ecosystems during geopolitical conflicts. If major nations restrict internet traffic or isolate their networks, cryptocurrency transactions between certain regions could become more complicated. Blockchain networks might still function globally, but access could vary depending on political decisions. Despite all these challenges, it is also possible that the crypto market would adapt over time. After the initial shock of a global conflict, people might begin looking for alternative financial tools again. If traditional banking systems become unreliable in certain regions, cryptocurrencies could regain interest as a decentralized option. However, that recovery might take time and would depend heavily on the stability of global technology infrastructure. The long-term outcome for crypto during a world war would depend on many factors: the severity of the conflict, the stability of internet infrastructure, government regulations, and the resilience of blockchain networks themselves. The early stage would likely be dominated by fear, volatility, and economic contraction. Crypto markets could suffer significant losses as investors move towards safer assets and governments tighten financial control. What makes cryptocurrency unique is its decentralized design. No single country controls the entire network, and nodes are distributed across the globe. This means that even if certain regions experience disruption, the network could continue operating elsewhere. That resilience could allow crypto markets to survive the crisis, even if they experience major setbacks. Ultimately, a third world war would shake every financial system on Earth. Traditional markets, banks, currencies, and digital assets would all face immense pressure. Crypto